I'm going to take the next 15 minutes or so to briefly talk about 3 points, and that's to share what's going on from a regulatory standpoint on blockchain in Switzerland. I'm going to take a little time to talk about the importance of Consortia on the market, and I'm going to finish up with a look at B3I, which is an insurance consortium, and share a use case there. There you go. That's pretty funny. So what does the blockchain look like from a Swiss perspective? You might have heard that we have a couple of banks and an insurance company or two, but just like and also just about every financial institution has some form of corporate identity in Switzerland. And Switzerland offers this very global perspective. We are placed at the center of Europe with a baseline of 4 languages. Thank you very much. Might just show you some. Nice. Okay. Awesome. We're really truly international perspective. So we have a baseline of 4 different languages, which in itself causes a huge amount of collaboration. We have financial institutions like the International Red Cross, the World Health Organization, the UN Commission on Human Rights, and refugees, and so on and so on. It also frames our practice here at Swissnex. We are an entirely international organization with offices in China, in India, Brazil, and in Boston and New York in terms of the US. I want to share with you the Free Electrons initiative that we have, which again is a truly global initiative, and it kind of shows the decentralized world view which is happening now. So Free Electrons is a global utility clean tech accelerator program. So we had the kickoff here in San Francisco. The next leg is going to be in Portugal, and the final leg in Singapore. We brought together 8 global utility companies and paired them up with clean tech startups in order to pilot actual clean tech initiatives at the end. But again, I think it shows the decentralized nature of innovation and technology right now. Again, in terms of Switzerland, Google's moved to Zurich now, and it intends to open and grow to 5,000 employees as a Central European hub. And this global position, I think, has been cemented having negotiated bilateral trade agreements. Switzerland negotiating bilateral trade agreements with world powers, including the EU. Importantly, when you get to regulations like PSD2 and data portability and security, and I promise I'm really not part of the Swiss Tourist Board here. This is just the reflection on the market. But what this all leads to is a notion of a decentralized approach to trade with an acute understanding of security, which very much lends itself to our topic today. And I'm sure it was very additive when the Ethereum Foundation formed in Germany, and there might have been some tax consequences, admittedly, but it's also why the ICO market is white hot right now in the greater Zurich area. But it's also why I couldn't find a single blockchain startup, a Swiss blockchain startup in the Valley right now. They've all moved back to Switzerland. And that, I think, is telling, particularly since we come across about 100 startups a year that are Swiss and here. Okay, it's a little blurry. Okay, so why Switzerland? Real briefly. So Switzerland is uniquely positioned, I think, because of its rule-based nature, its strong security, its political system is a federation, so everything lends itself to decentralized ways of doing business. It's a perfect example. It's a perfect environment for fintechs because of legal certainty, strong data protection, confidentiality, as well as an incredible, Google's right in moving there because of the engineering talent as well as the ability to rapidly change to market conditions. The Swiss banking organizations or insurance companies might be these huge immovable objects, but they are, in the last year, acting quicker than I've seen them ever act before in terms of figuring out what the future lies. And there's also a nice tax system as well, which definitely helps. They also have a pretty liberal approach to the notion that not every convertible crypto token is about money laundering. I mean, this kind of approach, I think, kind of leads the way that as long as you regulate when it's necessary, you can create an environment that will afford change. And the present Swiss regulations are that you need a banking license, which is hugely expensive, that you have to comply with the anti-money laundering statutes as well. But the future is, and these are proposed regulations that are on the books now, and you can already start to work around them, we're creating the notion for a sandbox. So as long as you have transactions that are under $1 million, FINMA, our financial services regulatory body, will allow you to build a working blockchain prototype in country. And also, we're having what we call a fintech license, which is a light banking license. And so, again, you can get up to 100 million Swiss francs, which is 100 million bucks. So what this all does is lend for an environment which allows for both startups and corporates to experiment on the blockchain, or experiment using blockchain technology. Okay, so I'm going to shift to my second point, which is to the role of consortium and foundations. So look, I've been at loggerheads with standard bodies here for 15 years. I come from an advertising and digital media and publishing background in the Valley. And the standards that were in place for traditionally were a boom for, their companies like Google and so on, but they didn't adequately take into account the needs or wants of the customer outside of the publisher or these large institutions. I've had a complete change of mind when it comes to blockchain. And call me crazy, but enterprise-grade standards, and software layers, and protocol layers that are portable and interoperable underpin the viability of industry-specific blockchain solutions and represent an incredible opportunity to deliver blockchain tools to market rapidly and iteratively. If we think of the ideas of decentralized connectivity, like edge computing, advanced data analytics, including AI, security, IoT, and blockchain, they all lead themselves to marketplaces as models. And we're at a point where Google and Amazon and Facebook, et cetera, don't have to be those marketplaces. Moreover, everyone has really given these intermediaries the lion's share of their customer data to this point in order to connect in a relevant manner to their customers outside of a billing interaction. And so in our banking and insurance practice here at Swissnex, a trend that is emerging is the advanced data analytics, advanced data analytics are causing organizations to understand that they have an immediate opportunity to combine third-party data with their own proprietary data sets in order to be more relevant end-to-end than they have been in a generation. So the opportunity, and some would say it's a $20 trillion opportunity, is new business model creation. And that's around connecting new tools and serving for identity, transparency, immutability, fee reduction, data analytics, fraud protection, security. And I think we reached a perfect storm in terms of the technology market, where conditions and data analytics have matched, and we can ask ourselves, not just what's next, but will you go build that for me? So behind me are just a couple of examples of active large consortiums, right? But we can add to this like Toyota, TRIMIT Alliance, which is just recently announced, built to facilitate radical increase in shared partner data collection in order to model the billions of road miles that are necessary to activate and operate fully autonomous vehicle fleets. B3I is another example of a European insurance consortium with 15 members, and I'll show you a use case from that in just a minute. But also, like, some people thought that R3 was dead, but $107 million later, in the last couple of weeks, the Corda open source platform is closer to reality again. And so this time is reminiscent to me of the Linux Foundation founding days, where collaboration has suddenly become the driving force for technological change. So I see a future for consortium to consortium interoperability in this kind of splayed permission blockchain where you offer global connectivity with privacy, conditioning, and security. But I am a bit of an optimist, so there it is. So lastly, I'm going to talk a little about B3I, an interesting use case around the insurance industry. And this is courtesy of Swiss Re, where we're going to have a fireside chat, but you get me instead. So the B3I is a consortium of, you see the members here, of European insurance organizations. But the focus was a pilot project for retrocession around large insurance contracts by participating companies, right? And so, the entire insurance value chain is ripe for automation. And the reason why I think this is a successful use case around a consortium is that the notion of a digital vault is really applicable when you think about connecting insurer to reinsurer, to the retrocession process, to the capital market process. The blockchain in this instance can actually facilitate a P2P marketplace solution. And so, you can really set 4 interesting use cases around understanding your customers, understanding a marketplace and the players, figuring out how to incorporate those smart contracts, and then think about where the capital markets plug in at the end. So this is the example from Swiss Re. So before the pilot process, and this happened over a period of 4 months, it took about 4 months. So retrocession or retrocession happened every quarterly. So they would balance their books and make payments once a quarter. Using the blockchain technology that they developed, they got that down to 2 months. So, blockchain has an interesting, not only around the use case around the acceleration of processes and settlement, and reduction of costs and operations, but it also led to more transparency for all participants and a better quality for cash management. So if you're tying up huge amounts of capital for an extra 2 months, that alone provides interesting savings. And we can get into the argument as to, well, is blockchain really all about just saving money and creating efficiencies, or is it a new technology? But that, I think, is a whole other talk. So the vision of B3I, and this is kind of interesting to look at, is that, if you think about the interoperability and the number of players that you can connect around an ecosystem, that's where the value of smart contracts and blockchains lie, particularly in an insurance case, right? But today you have multiple sign-offs, you've got delays, you've got credit risks, you've got cash flow inefficiencies. In the future, you can have instant settlement, consensus that's reached immediately, fast quality data exchange, immediate sign-offs. I mean, the potential of replacing an existing technology with a new technology, I think, is probably the most interesting role of the blockchain within the insurance business. So I'm going to end with what was to some an insurmountable hurdle when approaching blockchain, and that is who owns the data, who owns the IP, and if I don't own either one of them, I don't want to play. So Consortia provided a sandbox for pooling group data, which elevates the business case to a viable level. There's room for proprietary IP to be created around the edges of these data pools. And I'll end on an optimistic note that if we can build an ecosystem for manufacturers using supply chain blockchains to work with banking blockchains for payments and so on, just as the internet is a network of networks, the future opportunity for blockchain technology sits as a network of enterprise blockchains, each with a role and the necessary specificity of industry expertise to create a new climate of interoperability. Thank you very much.